This is eSec Money and Insights. Let's get over to our episode. It's good to see you, Chessum.
I know.
Well, thanks in your England kit.
Thanks for inviting me
Lions.
back. Three
England
Lions.
Kit. Well
Come on,
said.
England.
Yeah, did you like the word kit, Jim?
I did. That's impressive.
Not have
I
kits
was
in America? What's
No.
impressive about the word kit?
No,
Educate
uniform,
They
jersey.
call them uniforms.
Yeah.
But kits is
Kit's
specific
weird.
to non-US. I was in Newport, Rhode Island this weekend on Saturday. Had an early dinner, and then we kind of stumbled onto the game. We heard live music, so we just gravitated towards the live music, and it turns out they had like 20 TVs on while this live band was playing, and everyone was rooting for England. It was really fun.
Of course they were. Look, I do my Jude
Well,
Bellingham for
Of
anybody
course
watching
they
it.
were.
I think there'd be zero chance you'd be rooting for the US if the roles were reversed and you're at a bar in London.
Oh.
You're not going to be.
Of course I would.
But-
Of course I would. What are you
you know.
saying?
I don't know.
That is a good question. If it were the US versus Norway, would you have been rooting for the US?
Yeah, I guess so.
No, I don't think that's true. He'd be
No more or less
voting
than
for
Norway anyway.
Well, that's good. Yeah. But anyway,
All right.
it was good to see a lot of people excited, and there were a number of kits around, which was nice.
Yeah, well, from
Okay.
what I see on Instagram, we've been sharing the England football fan love across America. Seem to have made lots of friends, teaching everybody to sing a few chants.
How much of your life lately has been World Cup for you and others over there?
Oh, well, a lot. So the other night, even for the Mexico game, I thought, am I going to watch it? It's 1, possibly 2 o'clock kickoff on a Sunday night / Monday morning.
Right.
And then
It's a school night.
Yeah, I heard my phone buzz, and it's been about 3,000 degrees in London. It was too hot to get back to sleep. Started watching it, and it finished about 4 o'clock in the morning. And I remember looking out the window, and that's just when the sun pops up.
Beautiful.
And I remember thinking, wow, it's time to go back to bed for an hour before the alarm goes off. But it was worth every second.
Yes, it was a great game.
I bet.
Good.
So
Well,
yeah,
congratulations. I'm sure it's been a fun journey for England fans.
life has definitely been overtaken by the football. But so you got to live in hope.
Right.
That's it. Every time it comes around, it's the same thing. But on that note, I've done some preparation. So I'm going to
hold on. I just want you to know that we're going to try to keep the reins on you for this one. Jim Maroney.
No.
Jim Maroney is going to try to keep you focused, interested, Jim. You're going to try to be interested in what he has to say.
You're saying that like we've had a conversation and you're paraphrasing me, and I don't remember having that conversation.
Sounds like it's already lost interest to me.
I'm interested.
All right. Tell us what's happening.
It's because you live and breathe it, Jim. You know what's happening. You've got your finger on the pulse. You know it every day.
Without even prepping, I know what you're going to talk about.
This is
well, how about let's do that, Jim? Give us 3-word highlights.
Jim, please steal the thunder from Matt. Take it, Jim. No, I'm not doing it. I will just add brings up the topics that I'm guessing he's going to bring up.
How about this? For our video viewing listeners, when he hits things that you think he's going to bring up, just give a little finger in the air. Exactly.
Okay.
Go for it, Chaz.
Right. So in the spirit of the World Cup, I tried to mash up a bit of stock lending and a bit of World Cup. But if you remember last time I came on, we said that last year was an absolute stonker. I'm going to teach you a new word this time around, Brooke, because H1 has been an absolute belter of an H1.
Belter? So that's like I have a loud voice, I'm singing loudly, I'm yelling, and everything's excited?
Yeah, pretty much.
Not obnoxious loud, just good loud.
No, just good. A belter means it's brilliant. Right. So as the football world focuses on the World Cup, the securities lending market has put in a tournament winning performance of its own. Can see you smiling, Jim. At the half-time whistle for 2026, global securities lending revenues have stormed to a record $8.8 billion. That's up 33% year over year, with Q2 adding another $5 billion to the scoreline. Now, if this was the World Cup group stage, the market would already be through to the knockout rounds with games to spare. So the golden boot race has been dominated by Asian equities, which have been tearing through opposition defenses all tournament long. Revenues reached 2.4 billion during H1 and 1.4 billion in Q2, powered by the unstoppable front three of AI, semiconductors, and technology stock demand. Hong Kong, Taiwan, South Korea, they've all been scoring absolute screamers from outside the box, helping Asia top the revenue standings. Meanwhile, we've seen...
You're so corny. He's so corny.
Come on, you're loving it. You're loving it.
Wait, I have some questions, but
go for it. Go for it. You can stop me. It's good.
The golden boot, what are we doing with that? That's just like who's winning?
Who scored the most goals?
Okay.
So who's the winner?
Okay.
That's
like
definitely
MVP.
Asian equities.
And if the market is doing well and has moved along in the brackets, who are the other competitors? Is that where the whole analogy falls down?
Well, it doesn't fall down because in the first half of the year, for 2 months of that year, and for the first time on a quarterly basis, Asian equity revenues overtook America's equity revenues for pretty much the first time in history. I mean, that's pretty amazing. I remember looking at this
so we're
a few
doing
years
regional
back.
markets and asset classes as though they're country competitors.
Yes, if you like.
Okay, I like it.
I'm going to have to rein you in, Brooke, not him. All right? Let him go. We've lost half our audience now.
All right, keep it up.
So
that's a really interesting fact that has never happened before. And we've always talked about it being the next in line, but always a distant second.
Well, it always has been, but over the last couple of months of Q2, it's been phenomenal. You've seen a lot of activity take place in Hong Kong. Taiwan, we knew was already hot off the heels. South Korea was doing exceptionally well. But when you look over H1, the highest revenue generating market was Taiwan, followed by Hong Kong, and then South Korea. If anything, I would say that the steam's coming out a little bit out of South Korea over the last couple of weeks, in the last month or so. It's still doing very well, but Hong Kong seems to be where the main focus is from an Asian equity market perspective.
Do you agree with those comments, Jim?
Yeah, we kind of see that outcome through our auctions over the last few client auctions. It seems right. I find it interesting that Japan's not up there at all.
Well,
how far back are they?
So Japan would be, for H1, it would be in fourth place, revenues of 461 million. That's still up 71% year on year. But if you look at Hong Kong, that's up 107% year on year.
Yeah, there's a lot going on in Hong Kong. Yeah.
And Hong Kong's really like a comeback kid, because if you remember, there were economic problems in China, or concerns around the economy in China. There were concerns around companies being in China and the sphere of control of the Chinese government. And for a long time, there were actual investment outflows coming from China into India, but all of that is reversed since the AI traders really kicked off, and you're seeing a lot more activity taking place across the region as a whole. I mean, in Asia, you've got the perfect storm, because even in Australia, you're seeing a lot higher revenues than you've seen before, because you've got mining companies that are experiencing more volatility, and because of the geopolitical landscape as well, especially around commodities and everything else. So yeah, like Asia is definitely the one to watch. But on top of that, we've also got ETFs, which are also a bit of a breakout nation, if you like, Brooke, from the tournament. Once viewed as a dangerous outsider, ETF lending is now playing champagne football. Record inflows attracted the perfect through ball, helping ETF revenues hit $877 million in H1 and $484 million in Q2.
Does champagne football just mean that they win a lot and they can celebrate afterwards? What does that mean? Is that like F1 champagne?
Yeah, that's right. But ETFs have been phenomenal as well. You're seeing a lot of activity in leveraged ETFs. I'm sure you're seeing that as well. Single name leverage ETFs. Lots of thematic ETFs are being borrowed as well. But then you get a lot of GC activity taking place in those massive ones. SPY, QQQ, VU, especially in the US, IWM, and names like that. So outside of that, if you start looking at fixed income, so let's pretend that
before we get to fixed income, I just want to make a point and see if Brooke agrees. Most of our clients don't buy ETFs. Some do, but most don't. And some of our clients don't participate in Korea or Taiwan or any of the ID markets where you need pre-sale notification. And so there might be a pretty good variance between lending performance in our clients based on what their program is willing to do and not do, or what they own and what they don't own.
I think that's true. I also think that's always been true. I mean, there's some years where, depending upon IPOs or meme stock, deal stocks, high retail owned assets, things like that, it's sort of the story. That's a securities lending theme through and through. But
now with Asia being top of the heap and
it's more
ETFs being
pronounced.
I would think it would be.
Yeah.
So anyway.
Yeah,
Interesting
no, I
times.
think that's very true. I think the biggest comment, this is not in disagreement with you, Jim, but it's more of an and point, which is that a lot of our clients, some might not have a lot of ETFs, but they're in all those Asian markets, and it really depends on each client's different, right? But I
Yeah,
still think that one of the biggest themes on the client side is what is the reason today that they're so invested in securities lending? And what is the driver and the why? And the why, I think, drives revenue and outcome. And sometimes outcome is revenue, but also balance and maintenance of balance and liquidity and cash raising and other reasons. You might also see broad revenue trends that are going to match the market cycle, but some of that falls away for certain clients where maybe the reasons why they're engaged in the financing markets have evolved and shifted too.
sure.
I think your point is very true and accurate, but for some, it's an interesting sidebar, but it's not as relevant because the drivers are elsewhere for them.
I'd agree with that.
We're in a
And
lot of agreement today.
well,
We are.
record revenues, is that enough to push people into lending in those markets? What does it take to get
Uh,
them over the hurdle?
I think that it's helpful. Yes. I think that the Asian markets over time with revenues being where they are, absolutely that's sort of wind in your sails to get someone to enter those markets. People aren't not lending in those markets because of revenue. If they're not in those markets, they're not in those markets very intentionally because they haven't yet either identified a way in which they are comfortable providing the required pre-sale notification, or they have broader concerns around operational settlement risk and they aren't yet there in terms of their comfort levels. I think that revenue can help people put all of that into perspective and maybe put more focus towards finding the right operational solution, but it's not solely the driver of decision making.
Fair enough. Well, sticking on the equity theme, 8.8 billion in revenues. Asian equities revenues overtook the Americas. ETFs did particularly well. ADRs were still very strong. You would have probably seen the Infosys, and you probably see this on a day-to-day with a number of locates you're probably receiving it, Jim. Infosys was the highest revenue generating equity of the first half of the year, $123.5 million, followed by a Hong Kong stock, Knowledge Atlas Technology Limited. Normally, when you look at the top 10 highest revenue generators, whether it's a quarter, whether it's half a year, whether it's the whole year, you just get one list of 10 US stocks. But this is changing. We've got ETFs in there, we've got ADRs in there, we've got Hong Kong equities in there, and US. For the first time, we've seen a broadening out of those assets that are showing value from a securities lending perspective, rather than just concentrating on being able to cut and paste whatever the top 10 in the Americas were over to whatever it was for the markets. I think that's really good news all around. So hopefully it's going to be a belter of an H1 for many underlying clients, because somebody's going to have some of these sitting somewhere in their portfolios.
Also,
Anyway,
A
having more
belter is way
diverse.
better than a stonker.
I've heard neither before, other than on this podcast. Maybe the second half has a better chance of continuing with that outperformance because of that diversity across the top 20 or the top 50 specials in the market, as opposed to when it's concentrated in the US. If something turns there, then,
Yeah, I completely agree. If you look at everything that's taking place in the market over H1, nothing really seems to be changing heading into H2. Still got the same level of geopolitical risk. We've still got the conflicts in the Middle East. We're still seeing a lot of volatility in equity markets, but they're pushing ever higher and continually reaching new record highs. If anything, in the stock market, what you're seeing is a broadening out of investment flows, which I think should be good for securities lending. It usually generates more demand as well when you see investment moving from a smaller subset of asset classes into a broader range. I read this morning that small caps in the US, for example, have had their best half of a year since 1991. There's definitely a new investment thesis coming into play, which seems to be pushing everything up, which, of course, if valuations go up, then that's great for securities lending as well, especially from a revenue perspective. So let's get this over and done with so you're not cringing too much. So I'm going to move on to the midfield for you. In midfield, we've got government bonds who have dictated the tempo like a veteran captain, contributing $1.4 billion in H1 revenues. Corporate bonds doing a lot of hard work very quietly as well, winning second balls and chipping in to the goalie box, generating 564 million as well. Every successful team needs players willing to put in those hard, unseen yards. And that has really been corporate bonds and government bonds over the first half of the year. They've done exceptionally well. It's not just equities, it's fixed income, it's across the board. All of the asset classes are really doing well at this point in time. Second half of the match, should we call it? I think AI still remains one of the tournament start players. ETFs are going to continue to score from all angles. Asian markets looking like serious contenders for the title. H to be a thrilling knockout tournament. Revenues already looking capable of lifting the trophy for another record-breaking year.
So who plays keeper?
Yes.
Give me a little bit of keeper action in this. I'm learning a lot about football, by the way.
I was
Giant
watching
analogy we're doing. You're watching me think.
Watching your face the whole time with that half smirk, and I know you had to hold your tongue. There must have been like 7
Yeah, like
different
10 comments.
dad jokes comments you wanted to drop on him, but you wanted to let Matt finish. So kudos to you for not blurting it out.
Yeah, okay. I had a lot going on.
Keep dropping in the jokes, Brooke. Hopefully it makes me look slightly less cheese on toast.
Yeah, I am. I'm definitely
cheese on toast.
I'm like the can of cheese like squirting on top of all the rest of your cheese that you're delivering.
Cheese on toast. I like that.
From my perspective, anyway, I think this is going to be a brilliant year because not only is England going to win the World Cup, but securities lending revenues are going to have another record-breaking year. I say it now. You're always asking me for predictions. I can't see it being any other way by the second half of the year.
All right. Okay.
I'd agree.
Good.
We just this morning, a whole lot of U.S. banks reported quarterly earnings, and they smashed it across the board. And
did they
much
belt
of
it out?
Yeah, they did, Brooke. They belted it out.
Oh, see, I picked up on it.
And the banks, it was mostly equity trading or equity finance that was driving that, as well as deals and IPOs and kind of corporate banking. But I agree with Matt. I think the second half should replicate the first half. Revenues weren't buoyed by one-offs, whether it's like a deal or an IPO. They contributed, but there's a lot of directional shorts. And so there's no reason to think that's going to change unless we see major market corrections. Markets down 20% and people cover their shorts and sit there, and we're making less on the existing book, and the existing book is smaller. But outside of a major correction in a major market, I would say that's the case.
Do you think that's the biggest headline risk, a market correction, or do you think there's anything else on the horizon?
I think it is to our clients' revenue. And yeah, I think the biggest risk is a major market correction that's global, could result in shorts being covered, ETFs being covered, and 20% down on your existing book. All that combined would be much smaller revenue. So there's not much of a risk to not having a record year. Do you know offhand what we printed last year in total sec lending revenue and how close to that we are already?
I think it was 15 billion. There or thereabouts.
So we're already change, right?
Yeah.
So we're almost 2 million ahead of target if our target were last year. So 2 billion, I mean.
I was going to say that would be $1 billion.
We're up a third on where we were H1 last year in terms of revenues. So that's going to be a pretty impressive number if that carries on towards the end of the year.
Yeah, so
yes,
takeaway is it will likely be hard not to have a record year or a belter of a year at this point. I mean, something does have to like turn around in the wrong direction at this point.
Yes.
Question or statement?
Nah, it was sort of a synopsis. Yeah, you can disagree if you want.
As an England fan,
I agree.
You can never be too sure of the outcome.
So, well, right, yeah. Let's not count
count your chickens.
Do you count the chickens or the eggs?
You count
the chickens. Losing half our audience. Half the audience.
Count the chickens before they're hatched.
On.
Okay. Well, this was exciting.
Cheese
Matt?
on toast.
Cheese on toast. There you go. Look, we've learned something today.
All right. This was great. I enjoyed it. I don't know what our next theme is going to be, but we'll have to come up with something seasonally appropriate for year end. I know we've done the holidays in the past. You'll have to think of something new, though. We can't repeat.
I'll try again.
Jim, any parting words?
Come on, England.
No, thanks, Matt. That was fun. Yeah, go England. I'm rooting for them.
Yeah, that's the spirit, Jim. Thanks again for the invite. Appreciate it.
All right, Chessum. Go England. Thanks again, and we'll talk soon. Bye, all.
Thanks, Matt.
Thanks for listening. And now for our disclaimer.
This material is for your private information and does not constitute legal, tax, or investment advice. There is no representation or warranty as to the current accuracy of, nor liability for, decisions based on such information.